kids, the channel for learning about trading and investing. Welcome to Markets Next Week, the weekly market analysis show, where we look at what market view or outcome can be derived from the technical analysis for the next week, and that's happening every Sunday, right? And this is analysis for the week that's starting tomorrow, July 18th, and in 2022. So let's get to the charts. So it's Nifty on the left side, and then Banknifty that's seen on the right side. Both of them are weekly candles that you see. Nifty, you can clearly see it's an inside bar after a big up move the previous week. It's a breakout gap closing move that happened last week. We now have some kind of retracement that has happened. That's around 1 to 2% of retracement that happened after the big move. Right. Similarly, we are seeing also the close that's within the big candle on the Banknifty as well, after the big giant wide range bullish candle that you see on the weekly basis on the Banknifty. So that's what exactly happened. A slight retracement after a 7 to 9% of up move that has happened. So you can say probably this is near to a hammer, but not exactly a hammer, because the wick size on the top is slightly longer, and this one is an inverted hammer, but the wick size here on the downside. So basically Banknifty is showing selling pressure more, and Nifty on a medium to weekly basis showing supports from the downside more. That's how it is, right? It's contradicting, but that's what the candlestick pattern. And overall, if it is an inside bar closing that happens from after a previous big move, then it's some bit of consolidation that it indicates before it takes the next step of moving up. But overall, if you see on the weekly basis also, you can see that there is a trend line channel. If you draw here on the top two parts on both the indices, you can see it's a down falling trend line channel with lower low being made every time. So lower low here, lower low here, lower low here. So it's and lower high is made on the top side, lower high, lower high, low. So we don't know whether this swing high that was made the previous week is a new swing high, lower high or not. We don't know that, right? We would know only if it moves further down below previous week's low, right? But right now it is just a retracement after a big move. Normally when very big moves happen, so there is some consolidation or a pullback that happens. That's exactly what we are there. Now looking at the daily candles on Nifty, you can see that it's almost a green green hammer pattern that you can see here. A hammer at the end of a trend could indicate a reversal. This is a daily pattern, and this is a downtrend. So this hammer that is on the daily time frame, which is on the Friday, what has happened, could indicate there is a bounce up that's happening here and could move further up. So there is a change in polarity zone. Right, the gap here is closed. Now we have a gap on the upside here. So right, so the Banknifty, if you see, it's a spinning top. Spinning top does not have much significance unless it's in the top of a trend, right? So this the only significance that we can see is that it's a small body with equal sell pressure from the top and the bottom, right? So there's big selling pressure at the same time, very good support. So equal is what almost every small body indicates. But a change in polarity zone is still there because the previous resistance now is acting as a support, and it could bounce up from here. Let's say in the story of Nifty also. So there is a change in polarity potential that you can see there. Let's get into more specific what exactly happened last. So last week it closed 165 points. It closed 1% inside bar, and it's still below the 20 moving average on a weekly basis. We say weekly moving average. Banknifty, it's 1.2% here. So 1% of loss that has happened on both. Small retracement that has happened. It's a small weekly body. We just closed within the previous big moves candle, and it's still below the 20 weekly moving average, right? Daily time frames, you will see that it's a hammer. It's an up move. It's a green tick. It's a close above the previous high. So it's a hammer pattern that's formed. And the spinning top, which is not a close above the previous high in the Banknifty, right? So it's a flat or small move, but overall week to week basis, it managed to have a close within the previous big move candle. That's all. So 7 to 9% of move happened previously, and 1.5 to 2.5 kind of consolidation retracement has happened last week, which is fair. Okay. Now what we have to look at, just like how we looked at the last week, we wouldn't cross 16,800, we wouldn't close 36,100. These are two levels where there could be resistance, because the previous lower high patterns, we will break that with the previous swing we've taken out then we can hope for further move. That's on the that's on daily charts we're talking about. So 17,450 would be the next resistance, and 37,400 on the bank Nifty similarly the next resistance, right? So after this 36,100 is cleared, it's 37,400, because that's where the gap zone is there. So these two levels has to be closely watching both indices for the coming days. Until unless that happens, we would be consolidating primarily, right? Right, so that's what. So lower, so the lower side, we'll have to just look whether we are breaching the previous swing low or not. That's near to this, where the it's on the short term basis. You'll have to see that, right? But in the medium term basis, you'll have to look at this previous swing low, which is 15,200, is where we have to keep a close watch. So unless and until 15,200 is breached, downside we would be consolidating within that range, right? So upside and downside levels. So Bank Nifty also this previous swing low of near to 33,000 kind of levels, so 32 kind of levels. Well, it almost made the previous swing low of. Bank Nifty in the case, it has not breached that previous swing low, but it almost retested that level, as you can see. So these are the two levels on the medium term that we are doing. So unless and until this is breached, we would be just zigzagging and consolidating before there is a major event that comes in, which would either break it down or move it up, right? That's what it. But overall, the direction is evident here from the medium term basis and the daily time frame also, right? So basically, we are trying to take a bounce up. This is another look of on the investing.com. Look at this: higher high, higher high, higher high, higher high. I'm sorry, previous swing high. It's lower high, lower high, lower high, lower high. Previous swing low, let's lower low, lower low, lower low. That's being formed on both the indices, and now we are attempting to move up. So this previous swing high, which is at 17,800, that's why it's crucial to clear that. Right. Similarly, 36,100 is crucial to clear that because it's a previous swing high. After that, you have to look at the gap resistance that we have discussed about. Same the Nifty also, the gap resistance is there, right? Looking at the Bollinger Bands, what is it? It's interesting to see that. So what you see here is absolutely there is no bearishness that is there. There is a contraction that is happening. Right? Bollinger Bands are contracting. They are not expanding on the downside, which only could say that it could be bearish. But right now it's not that. It is just contracting. That means there is going to be lesser volatility and more of sideways movement that could happen in Nifty. Bank Nifty also, there is a contraction. There is no bearishness, and there is an expansion, but that's on the upside. Right? That is very. That's on the bullish side. That could indicate that there could be an up move. Right? And both the medians are below, like that means the price is above the 20 moving average, which is median of the Bollinger Bands, which is again giving a bullish bias to both, right? So there is bullishness, that's contraction to moving towards the bullish expansion on the upside is what the Bollinger Bands are talking about in the short term for both indices, right? Let's move on and see the support resistance levels. So there is some mistake in the writing that is there here. We'll clarify that, but levels are more or less fine. Right, so right now the first support that you can see on the Nifty is 15,850, 5950, which is 960 retracement level also. So this is support zone. So this 15,950 is breached or 900 is breached, breach for sure. Just it got actually breached last week, but will that will there be a concrete breach or not is what we look at. So 15,850 is where it bounced previous time. So that this level is crucial support first. If that gets breached, then you have 15,550, which is a previous swing low, and then another swing low that is there is a lower low pattern, which is 15,200. If that is breached, then we have trouble, right? Similarly, the resistances. This actually 16,100 to 16,200 is a resistance zone. I had wrongly written it as support. So this is 16,200 and 16,300. That is very crucial to clear, right? Because that's where the previous swing low was made, right? This is close to 16,275, so that has to be closely watched. So that's a resistance zone. Then you have the previous resistance of 16,350, 16,450. Then you have 16,550, 60. Then 16,700, 750, 16,800, 16,900, which is very crucial because it's a previous swing lower high is getting breached. So 70,000 outing number usually will be the next resistance. And above 70,000 only you have the previous resistance. That's we already seen that it is close to 17,400 levels, right? So that's the upside resistances and the downside. You can note of these levels. Marking these levels would enable us to decide on which side to go and when to go, long or short, right? Banknifty similarly, you can see that there is a support that it has taken in the range of 34,350 to 34,750, which is, if that is breached, then 33,600 to 34,350, which is 961. If that is breached, then you have an interim support at 33,000, 33,350 levels, and if that is breached, then 32,400, 32,800, and that would be a previous swing low. That, and if that is also breached, then we have trouble at 31,800 to 32,150 levels, where another crucial support zone is at near to 32,000 levels, right? Similarly, on the upside, the resistance would be at 35,000 and 35,300 levels, 35,600 to 35,900 levels, and then above that 36,300 to 36,800, and then above that you have the gap resistance that is coming in at near to 35,000. That's 36,900 to 37,500 level would have a major resistance. That's resistance supports on the bank nifty that you can see. Make a note of these levels, correlate these with the open interest on the weekly basis, and then you can trade the swing trades accordingly. So this marking the levels is all that we can do, right? We cannot predict the markets. The markets are random in behavior, but we can only have a probability study of where could the market slow down, where could the market face stiff resistance and then bounce reverse, where could the market break out, and where could the market find the support. So these are all the things, these are all the probability. So basically support and resistance is all that we can do, right? And manage your risk according to these probable zones is all that we can do in trading, right? No matter what analysis that we do. So that's a wrap-up summary, right? We have a small retracement after a big up move. Now we have a potential of moving up as per the charts, right? And as per the Bollinger Bands, we are not going down, we are consolidating and then trying to find take some time, and then before it can move up. Now looking at the price, momentum and trend is the next part. Momentum indicators will be used as RSI. So RSI is showing that it's sideways movement, right? Sideways with the momentum that is rising in the sideways, right? That's positive, that's bullish. So the momentum is sideways right now on the Nifty. On the short term, that's in daily charts, but on the medium term we have the momentum sideways, but that sideways is falling. That momentum is slightly falling. The sideways is in the falling pace because of last week's move, right? So overall you can say Nifty is sideways, right? Short and medium term together. Bank Nifty is it's the same, sideways with rising momentum, and short term sideways with falling momentum on medium term, right? Short term it's sideways. So overall Bank Nifty and Nifty is having a sideways price action that's happening from the momentum perspective. So divergences, so this is what we're talking about, right? So the momentum is in the sideways zone that we have marked. Bank Nifty also, it was bullish zones, but now it is in the sideways zone, just holding the support of the RSI moving average, right? It's moving sideways. In the medium term it is also sideways, is what it indicates. Now trend, what is the trend indicating? So trend is actually bearish in the Nifty, bullish, continue to be bullish in the Bank Nifty, but you can see that the bullishness is falling down. The strength of the trend, the strength of the bullishness in the Bank Nifty is falling down, it's not rising up. Similarly, the trend of the bearishness is actually falling down. That means another crossover can happen. So if you just wrap it up, the ADX indicator, trend indicators, ADX, DMI, positive, negative, that indicator that we are using, it shows that there is short-term bearishness in the Nifty, and this the Bank Nifty has got short-term bullishness. It's in that zones, you can say. But on the weekly charts, it's bearish on both. We don't have the bearish charts of that right now, but if you look at the bearish charts of the Nifty and the Bank Nifty, it's still bearish, but that bearishness is reducing. It's falling strength. It's reducing bearishness, and on both indices, Nifty and the Bank Nifty. So we can wrap it up and say that it's it is somewhere in the neutral, because we have a Nifty which is bearish but not having that too much of bearishness, that is coming down, not having too much of strength, and Bank Nifty which is bullish but not having too much of bullishness also. Somewhere in the neutral is what the trend indicators are clearly showing, right? Sideways and neutral trend. Let's move on and see the volatility. So India VIX is the volatility indicator, and what does it say? It's 17.5. So gone are the days of the 25s and 28s. Now we have cooled off. Last week we had 13% of cool off. Now another 4%. So that makes a lot of down move, right? A lot of percentage of down move that has happened, which is really good. It makes it easier, especially for the intraday traders and traders which are swing traders and options and derivative instruments will find it more easy, because although the V-shaped moves are there, the fluctuations in the market, the choppiness in the market will be relatively less. But this is a zone where it had bounced up earlier also. If you look at this, you can see that in the April it went to the 17 zones and then bounced up. So it means volatility or VIX indicator has always been reverting. It won't continue to go down forever. It would find a support and then bounce up. So there is a probability that it can go back to the 2023 kind of levels back again. So be cautious. But as long as it's below 20, it is easier to trade, and you can take positions with position sizing more than what you used to do when it was near to 20 plus levels. Right. So that's how the volatility has cooled off, which is good. Which indicates there is bullishness in the market. The fear and greed has reduced a bit against. Now, the next one is the open interest analysis. The open interest analysis on the futures are showing very positive. Right? For the Nifty and the Banknifty, Nifty is showing short covering. Short covering is that people have gone shorts are now reverting and taking. So it can give big breakout moves on the upside. Banknifty is long built up. It's bullish. This is what the open interest of the futures oil, which is on the Friday built up that has happened. Obviously, it was a hammer pattern green close above and big bounce up that has happened on Friday. So open interest oil on the futures is bullish. Now look at the June 21st weekly expiry for the options open interest. What does it say? The put call ratio is also bullish. If it's 1.11, it's super bullish, but 0.81, it's slightly less bullish, but it's closer to bullishness than to bearishness. What you can see on the Banknifty 0.81. So PCR is kind of bullish. You can wrap up. OIA on the futures also is bullish. VIX is cooled up, which is bullish. So that's what the OIA and OIA analysis of the volatility is indicating. Momentum is sideways and trend is also kind of neutral, but volatility and OIA is giving good positiveness. Now July 21st, 2022, these are the levels. Look at this. You can see that it's overall dominating is the call position. So there is some bullish bearishness that you can see, but because the highest number of puts calls are written on the is what is dominating, right? So look at the level 16,000 to 16,600. That's where the 500-point range is what it's saying 4 days to expiry on 21st. That's where the highest put writing is seen at 16,000 and 16,600 is the highest call writing is seen. 5,900 to 16,600 is the range for the highest put and call writing is seen on the second after the first 16,000, 16,600 levels. That's where the second level is, right? Banknifty is 34,000 to 35,000. That's a very narrow range where Banknifty option writers are applying it. That's where the highest put and call writing is seen. And next highest, second highest is 33,000 and 35,500 is where the next highest number of call and put writing is seen. And put call ratio and futures OI build up, we already seen that there is bullishness on both, okay, on the PCR and the futures OI. Moving on, we would analyze the Nifty sectorial watch. Like that's what we would look at how the different industrial sectors performed last week. Just to wrap up, this is what happened. IT is disappointing. Right? It has fallen down. The only sector that has fallen down. Metal is also not going great, but because it is kind of flat, 0.5% up. Right? But IT clear bearishness there in the momentum perspective and the price action point of view. It's at a major support zone. But one thing we have to remember in the IT sector is that there is a potential bounce up that can happen because it is retested. We look at that. Look at the IT chart. It has retested the previous support zone the second time in the last 4 or 5 weeks, right? And now there is a change in polarity bounce that is possible because the previous is support, the previous breakout zone, which is now acting as a support zone. Now another thing is there is a divergence in the momentum that you can see, which is bullish in nature, where the momentum is rising and the price is falling. So there is a chance that it can reverse from here. That's on the weekly charts. So that's what IT is. So metal is also weak. You look at the metal, you can see the charts here. It is trying to bounce up. Right? It is not as bearish as the IT. It is given a 0.5% up move close, but it's still very big. It's trying to climb back a more up. Momentum has just managed to climb to the sideways one, you can see. Right? So that's now bullishness is seen clearly in the auto sector and the FMCG sector. Look at the auto sector. Right? It's a rounding pattern breakout. A green candle, white range bullish close has happened. So we can clearly take long trades at this point in time, provided the neckline should be the break. So this could fail, then that could happen anytime. Any breakout, there is a big potential that it can fail and create another resistance on the upside. So what you need to do is to look at the charts of the stocks, individual stocks, where the highest momentum, highest bullishness seen in which charts. Take the stock and then have a, it would have a similar pattern. Right? The neckline where the breakout has happened would be a stop loss. If you are getting stop loss, you will get another chance probably, right? Or you went wrong and you lost little, which is okay. That's how you'll play the game. Nifty and at the same time FMC also, it's a breakout, but you have to be cautious. There is a previous major resistance zone that is there. Only a trade can be attempted only if there is a breach above that. But momentum wise, if you see both time frames, it's bullish. So Nifty and FMCG both are bullish. Last week what they do, it's like 2% up in the auto sector and 1.25% on the FMCG sector. Now pharma and reality both are bullish on the short term, but the medium term it is trying to catch up. So it is up to you whether you want to take a long bet. If you're more confident, if you want to be more confident, then wait for the momentum. The weekly also to get next Friday. You have to see whether that momentum sustains above and comes above the sideways into the bullish ones or not in the form and reality. If that happens, good. But overall this week, it's more than 2% of bullish moves that has happened on the price action, and momentum is already bullish on the short term for pharma and reality. Right. So that's a wrap up. So long bets can clearly be made on the auto sector and FMCG and across the sector except the IT. Movement, bullish movement has happened. So IT and metal stay away right now because it's bearish or short term, right? And you cannot go in the short term. That's also you have to be cautious because although we have a stock pick on the IT sector short side, you have to be very cautious, very tight stop loss if you're going short, because IT sector you are having a medium term bullish divergence potential. It is not confirmed. Only if the price moves above, you can confirm that. So there is a reversal that can happen. So going short also is slightly risky. You have to be having tight stop loss if you're doing that. But longs definitely can be attempted on with a tight stop loss again on the auto and the FMCG sectors. Keep a close watching other two sectors because that's also catching up. Index heavyweights. If you just look at HDFC, Reliance are the two major players. Right? HDFC, you can see that it is kind of consolidating support zone, momentum sideways, nothing big there. HDFC also kind of consolidating sideways movement. There is a big up move on the upside, big resistance on the upside. So Reliance is interesting. It has fallen down, made a very good correction for the second time the last several weeks, and then it is consolidating. You can see two green candles at the neckline. So if this neckline is breached and it falls down, then we have trouble. That's about sideways consolidations, just like HDFC is what is happening in the Reliance also. So two major heavyweights, HDFC and Reliance, not doing great, right? But not falling either. Moving on, IT sector facing trouble. TCS went with a wide range bearish move, right? It's still managing to hold at the edge of the trend line channel. But so you have to stay away from this on the long side for Infosys and TCS. Disappointing moves. HDFC Bank trying to consolidate just like the HDFC, right? Not ready to give up after having made a big bounce move and closing above the candle to just retrace a little bit, but still sideways on the medium term. Kodak Bank is also trying, it's doing good. It has always been zigzagging in this range, and it has found a bottom and retested that bottom several times this year, and once again it had showed 2 weeks of up move from there, and it could sustain and go till 1934 levels again till it faces the next resistance, and then it will fall back. So this is what is happening in Kodak Bank since long. So if you want to play the consolidation game where you take a long trade at the support and then exit before it hits the next resistance, or you wait for it to hit the resistance and then take a short position on the downside, so that could give good rewarding option strategy positions on the Kodak Bank Mahindra. And so overall, if you see, banking sectors are consolidating, IT sector is doing bad, and Reliance, who is the other guy who is also retraced and then now not ready to fall down and consolidating. And no great news on the heavyweights as of now, right? Now institutional participation, if you see, it's like 5,900 crores of selling has happened, reduced selling, but not reduced from the last week. It was just less than 3,000 crores of selling, but they increased a little bit. But overall, if you look at the previous big selling of 15,000, 20,000 crores of selling in the cash, now we have seen that they have really used the selling to some extent. But DIS Also, reduce the buying. You can see that's only 2,150 of course of buying. So where it is, we also has moved down last week, if you see, right? So institutions are kind of wait and watch mode and not buying too much, not selling too much, right? But FII selling has paused a little bit. No big selling is seen last week, so that's giving some hope. Now look at this. That's where we are looking at global markets and the global commodities, right? US markets. This is the Dow Jones that you see on the left side. Then you have the Nasdaq and the S&P 500. These are all weekly charts. Look at this bounce up that happened on Friday. Like good bounce up week, but the thing is, it has ended up. Yes, Dow Jones has ended up with a dragonfly kind of move. It is showing very clear support at this zone. That's where the bounce up has happened, but that's not enough to close above the previous swing high. So we have to keep a close watch whether this 33,941 would be taken out or not on the next week. But this was a very good bounce move that has happened, and it has momentum has managed to hold on to the sideways zone, right? While the trend still remains bearish, so we have to be cautious. But big bounce up attempt at least has happened, and sideways momentum is maintained on all the major indices. Same has happened in the Nasdaq also. It's a hammer pattern which indicates there is support in the downside and bounce up. Potential up move is there. Momentum is in the sideways zones, not in the bearish zones. Right? So, as in find also a hexagon hammer similar to the Nasdaq is what has formed. So that bounce up gives hope that you'll have to keep close watch of whether it will sustain this bounce up or not. Will it break the previous swing high, right? That's what we have to clear. If that happens, then it's good for our IT sector reversal, everything goes fine. But if that does not happen and it makes another lower low pattern, then we have trouble in our markets also. That's about the US markets. So it's a flat kind of week that has gone by, but a good bounce up gives in hope. Right? Remember, we had 20 to 35% of correction that has happened on all the major US indices, if you see in general, right? Now another action packed zone is where the currency is. Like dollar index is shooting up and making all-time high levels every single day. Look at this. It's a 20. It is approaching and inches away by very few points away from a 20-year high is where the US dollar index is heading up to, which is not great for OP. Right? Although it's not directly correlated. Right? Look at the USDINR currency pair, how it is trading. It kept on making all-time highs and it has gone beyond the 80 also, and now it managed to close with a 0.6% again, further up move at 79.76. So dollar index at 107.98 and USDINR hitting above 80 is clearly worrisome, where rupee is weakened to the lowest. Right? No major action seems to be taken from the RBI side, right? So probably they think that may be the right thing to do. Don't know the fundamentals behind that, but it looks like the rupee, it will take a long time before the rupee can, gain some strength in the near future. Crude oil also has, crude oil, it's positive news. So basically, it gets negated. The dollar worries, and the crude oil is getting negated. Crude oil has dipped 7.5%. Last week also, there's a big move. So it is below 100 close that has happened on a week to week basis, 94.41, which is a falling momentum, falling in the sideways. So big call off has happened good, but so that is also very much linked to our Indian economy and obviously the market. So, but the problem is the dollar rising, so this is negating the benefits. Right? So that is exactly what is happening in the global commodities and the currency in the US markets. Now, gold, coming to the gold, it's a commodity, global commodity which is also crashed. Normally gold, when the market is crashing, only then gold would rise up. Right? So this gives some hope that the market may not be crashing, because gold is going to be bearish zones on the weekly basis. So big crash and maybe taking support back to the 1878 levels where it was retested multiple times. Looks like that. But 2074 was what it did, few months back, where it attempted to break out. Once again above the COVID times, but it failed miserably, and now it is back to that to the 3,300 points down, and probably it may end up near 21678 kind of previous support zones. Again, momentum is in the bearish zone. So gold is a hedge. If you have taken positions on that, we'll have some interim troubles, but most likely it may be finding some support here. Gold takes a lot of time to move on the upside, so most of the time it may be considered that's already happened, but now it is falling to the momentum is falling to the bearish zone, so it may bounce up and then find the support. Here is what we have to hope for, right? So that's the two commodities what is seen, right? Now two topics. India Hotels, it's a Tata Group company, and it seems to be breaking out of a rounding pattern. A solid green candle close for the second time on a weekly basis, right? The momentum has climbed to the bullish zone after a long time on the medium term. So this could face some resistance at the 369, so it could give a potential 50-point trade. It's possible on the upside, or a mean reversion shorting opportunity also there. But if it breaks and gives a green close above 269, then it's going to be a very good move that may be happening in this India Hotels. Right. So it's a long trade. HCL Technologies, as I said, IT sector is bearish, very much bearish, and clear bearish in the HCL Technologies charts, and it is a major support that has got previous support has got breached, and then every potential is there. It can fall further down and give good swing profits. But the thing is, there is a bullish divergence that is seen in the sectoral range, so keep a close watch. Right? But definitely HCL charts are bearish, and it could give potential on the downside. If the US market is making big moves, and all it gets negated, so we have to put tight stop losses for sure. So two topics: short side HCL, long side India Hotels Tata Group company. Now on the index play, Nifty double diagonal counter spreads that we take every now. It seems to be a very good risk reward, not risk reward, very good POP, probability of profit, and a very good range. 15,690, and 16,368. That's a 1,000-point range. Where do we get other than a double diagonal counter spread? Such a wide range. When the markets are volatile, that's what we want to know. We don't want to take overseas overnight risk, right, where we get wiped out. This does not happen in this kind of strategies. We basically do selling of the next month's, and then next month's buying is what we do, right? With the price that make sure that your current price is in the middle of this graph that you see, right? So we sell as 15,750 put and 16,300 call, right? And then we take the hedges of the next to next month. That's at 15,200 and 16,650, and we are protected. It's fully risk defined, very less capital, right? The two lots are taken, right? And risk reward is not that great, but what we have to do is, the moment you get 1 to 2% come out of it, and regularly do this every week. That's a game, right? So don't worry about the risk reward that is mentioned in the in the payoff graphs. No, just a brush up. So we are done with to pick up two stock picks and a third index option trading strategy. And then we had analyzed the global markets, the global current commodities, and institutional participations, and index performance, and sectoral watch, and right, we also have seen the volatility, over interest, trend, momentum, and all of this, right? So just try to wrap up and give my view on this. Right, the same study could could potentially give a different view, because the trend, momentum, volatility, all these things are not clearly on one side. So it's very difficult to predict. Predict it based on the probability on what sides on a week-to-week basis it may go. But if the market is trending up, then everything is clear. So it is clear where it is going. But right now, that's not what is happening. We are made of correction, and then we have made a bounce from there. So will this bounce survive, or would it again further make another? So that so it's an uncertain, difficult time to read and make out predictions or probability studies of the charts at this point in time, right? Because so all that we can do is, we can analyze the price patterns, we can analyze the support resistance levels, we can analyze the momentum, we can analyze the trend, we can analyze the volatility in the market, and then we can conclude something, right? So if the trend, momentum, price pattern all goes in one side, either bullish or bearish, then we know what is it. Right now it's not, it's here and there, you know. Even the indices, Nifty based one way, back was another way, volatility in futures is different, OI is different, right? Price pattern is different, momentum, so there is a lot of contradiction. So but overall my view for the market is mildly bullish, right? Reasons, we know that we had a bounce up of 79%, right, previous week. So this week, after the big move, always it's something that it will have a correction. So 1.25 and 2.5 on Banknifty. So that kind of correction has easily happened, which is expected. Nothing wrong. The VIX is still at 17.5 kind of levels. Brokerage is very close to 1, it's a bullish on both. Openers, futures that is showing that short covering and long build up, it's bullish. FI selling has reduced as compared to 15,000, 20,000 crores of selling that used to happen few months back. But the balance is not showing any down, it's showing consolidation only. So we're also an expansion on the upper side. Right? Now CIP bounce, it's a support zone, so it's potential that it can bounce. So every time it goes, takes a support of the previous resistance, there is every chance that it can go. So short-term bullish is what my view is. But look at the US markets. It has also given a very good bounce from the last week. Right? After making a dip, it is, but that does not indicate there is bullishness yet. It's the indecisive dragonfly that has come out. So there is bullishness that is still there, but a bounce up has happened. If it tries to break the above the previous swing high, then there's a potential that it can work out, right? So any big moves that happen in the US markets due to any event related to the Fed, interest rates, inflation, etc., jobs data, whatever, could, if that is a big move, definitely, you know, analysis phase and it will immediately reflect, because overall it's bearish in the US markets. But some hope is there because of the bounce that happened last week. That's how it is. So recession fear, RBI repo rates, US inflation, Fed interest hikes, Russia-Ukraine war still there. All this uncertainty is still there, even though we are saying that the VIX is fallen below 20. Right? So crude oil is giving, you know, still higher. 94 is not that great compared to the 60 or 70 levels that we had last year. So crude has cooled up, which is very good, but it got negated by the rupee. That was weakened. So right, so it's still not that great. So overall, there is a lot of uncertainty that's still there. The positive things is that the market is not ready to give up a crash. Market is not giving major, you know, downside moves. You know, it has been retesting the previous supports around the 15,000 for multiple times. So there are buyers out there. There are mutual funds where the money is flowing in from the retailers, and then, you know, there is confidence that the people have in the Indian markets. But the global markets are crashing with IT, Nasdaq, IT falling. Our IT index would obviously crash, even though the dollar is gained. Right? There's no other way than to follow the mother market. Right? So that, but our market has got positivity and then a lot of confidence. People have confidence in our market. That is evident from the charts itself. Now whether it sustain or not is something else to watch. But in general, we are consolidating. Nothing but consolidating. You know, we are not in for a big crash, unless any major, black swan events like that comes in. So India is still less than 20, which is good, but you have to be cautious. So as I said, 16, 484, 36, 83 is how the levels initially. We have already seen that all that level. So the first thing that you have to see is, would we be able to break the previous swing high in both the indices? If that happens, that's positive. Then would we be able to break the next gap resistance on the top? If that happens, well and good. We can conclude we have made a bottom. Otherwise, we never know what happens. We probably might have just made another swing high and then heading towards a swing low. That could be what that may be happening. We never know, right? At this point in time, it's difficult to predict or conclude to that. But these are the levels and the probable places where we have to watch out and come to conclusion for the next week. Right? As of now, my view is that it could make, bigger moves. After a bit of consolidation, the medium term basis, right? So overnight positions, as I always say, has to be protected, especially in the options trading. Has to be protected with hedging only, and do not take blind risk and unhedged positions and get your capital wiped out, because global markets could do anything in the night, and then there's no stability, there is uncertainty, a lot of uncertainties in the market. So you have to always go for option strategy if you're playing options, and take hedge positions where your risk is defined. You protect your capital on the downside by hedging using option strategies like covered call or put cash secured puts, and all these strategies can be applied well, and then you can protect whatever you're losing on your quality long-term stocks. If they are not quality long-term, then sell it off, come out of it. Yeah? Play safe. So that's my view. So if that helps you to frame this study that we have done on various parameters of based on the technical charts and the fundamentals and global markets and all this, if that helps you in some way to frame your view on the market, even though it may not be exactly matching with my view, if that helps you some way, consider hitting the like button and share. Put in your comments and share it to maximum. We have very few subscriptions. I appreciate your help in this regard, and thanks a lot. Happy trading, happy learning. Bye.